So I would request President ICC to kindly initiate and deliver the welcome address. Over to you, Mr. Agarwal.
Thank you, Dr. Singh. Good evening, ladies and gentlemen. A very warm welcome to all of you. On behalf of ICC, I thank you for joining us today for this very pertinent session on building future businesses, India at 100. Mahatma Gandhi had once said, the future depends on what we do in the present. Where will India be 25 years from now? This is a common question discussed and debated in many forums. Across all these forums, the discussion examines the underlying drivers, savings and investment levels, physical and social infrastructure, nature of governance, and government. I feel the central question regarding India's future growth should move from what is India's potential to how can India's true potential be unleashed. To accelerate India's economic growth, we need to identify sectors that have large and underexploited potential, lay a roadmap to achieve global relevance, and subsequently execute them flawlessly to get desired results. Our future is not predestined. Our collective actions in the present will transform India in the future. With that, without any further ado, may I now have the pleasure to introduce our eminent guest today who will share their thoughts on building future businesses, India at 100. They are powerful voices, Mr. Sanjeev Bikhchandani, Mr. Gopal Srinivasan, Mr. Dipinder Goyal, and Mr. Rajan Nawani. A Padma Shri awardee, Mr. Bikhchandani is a veteran of the Indian internet industry. He is known for his contribution towards Zomato's success, and more importantly, for being the first investor to back the food delivery startup in early 2010, and eventually see it go public in July this year. After Zomato's IPO, Policy Bazaar, another of his early bets, has also filed for a 6,000 crore IPO. He's an example to follow for the ecosystem. Mr. Bikhchandani founded InfoEdge, a pure play internet company that runs sites like Naukri.com, Jeevansathi.com, 99acres.com, and Shiksha.com. A man who wears many hats, Mr. Bikhchandani started off as an entrepreneur, turned into an investor and mentor, and is now a philanthropist as well. Mr. Gopal Srinivasan from the TVS family needs no introduction. A passionate entrepreneur and an avid angel investor, Mr. Srinivasan is the founder, chairman, and managing director of the TVS Capital Funds. He is a founding member of the Chennai Angels and the former chairman of the Indian Private Equity and Venture Capital Association. As a member of the Alternative Investment Policy Advisory Committee of SEBI, Mr. Srinivasan recommends policies for growth of venture capital and private equity in India. I would also like to welcome one of the most talked about personality in business world today, Mr. Dipinder Goyal, founder and CEO of Zomato. Congratulations, Mr. Goyal, for the stellar debut on the Indian public markets. He's an enthusiastic foodie. Mr. Goyal and his friend Pankaj Chadda started an online food ordering portal, Foodie Bay, in 2008 after graduating from IIT Delhi. The startup was later renamed Zomato in 2010. The startup received its first major funding of $1 million from InfoEdge in August 2011. A man with a vision, Mr. Goyal has been successful in creating a kitchenless future. Zomato achieved the status of a unicorn in 2018. In 2020, their closing was of a $660 billion primary financing round and at a post-money valuation of $3.9 billion. What a success story this has been. Mr. Rajan Nawani is the vice chairman and managing director of the diversified Jetline group of companies operating out of Thailand with a presence in India since 1974. The group is building new age businesses in varied consumer-facing digital platforms, products, and services through group company Jet Synthesis. Additionally, the group is engaging with the startup ecosystem in India, Israel, Singapore, UK, Japan, and USA. Mr. Nawani is currently the chairman of CIS Council on India at 75. He also plays multiple leadership roles on various international forums. With this, as we are all eagerly looking forward to this session and listen to the four powerful voices, I request Mr. Nawani to commence and navigate the session. Over to you, gentlemen. Thank you.
Thank you, Vikas. It was a real pleasure to be here with all of you. And, I'm going to keep this conversation more like, as Sanjeev said, four friends having a chat,
Absolutely.
but the four friends are across different generations, have seen entrepreneurial journeys of a different kind. And the moment, we are going to talk of the future of India at 100, it is something that we can all agree that none of us will probably be able to accurately predict, what India will look like at that point. But I must say that the Prime Minister's vision, of the new India of 2022, something that, I was fortunate to be a part of way back in 2007 and 8, and Gopal was part of that initiative too, about envisioning what India could be, in 2007, envisioning what India could be in 2022. And we had discussed with him as the Chief Minister of Gujarat, and he said, Delhi aayenge, we will make this happen. And true to that, we have seen a transformation of India, which has been very, very significant. Professor C.K. Prahlad had led a lot of that thought process. So I think, as we commence into this conversation, what I'm going to do is, look at this in different journeys, which are there. If I remember correctly, the thought process that went into the 2007, 2008 visioning was that there was economic liberalization in 1992, which had triggered, fast growth. But how do we accelerate that over the next 15 years is what brought us to 2022. And now I think it's about turbocharging that growth, as we move forward to 2047. But Sanjeev, let me start with you, because you were a product of that, pre-liberalization era. You started off as an entrepreneur there and then conquered so many different challenges along the way. Maybe a little personal insight, from you, a little bit about your journey. Then we'll do that with Gopal and then with Dipi, and then get into a more structured conversation around, where could we see future businesses going. So over to you, Sanjeev. Sanjeev, you're on mute.
Yeah, sorry, unmuted. Rajan, it's like this. When you're a startup entrepreneur, you're broke, you're bootstrapping, you have no money. You don't even have big dreams. You have small dreams, right? For us in the beginning, success was survival. If you survived to pay the month's salary bill, you were successful for that month, right? So it's not as if you had a big idea. It's not as if you had this, hey, I'm at the start of an era, 35 years later, I look back and say, okay, that was something, right? You were just working for the day, for the week, for the month, for the quarter, right? And slowly, you sort of clawed your way up. But look, we were helped by a number of things. So we were helped by the fact that liberalization had just occurred when I quit my job in 1990 and the economy opened up in 91. So right place, right time, right? The economy began to grow, we began to get some business. And for 7 years, we drifted and did a whole bunch of small things, of various sorts, salary surveys, databases, teaching, training, writing, some market research, whatever came my way to survive. Right? And in 97, we launched Naukri as one more small idea in a string of small ideas. When we launched, there were only 14,000 internet accounts in the country, right? We had no clue where it would go. But one more experiment, we tried it, right place, right time, worked hard, worked smart, got lucky. This one had tailwind. So we had stumbled upon, after 8 years of, bootstrapping, we had stumbled upon what seemed like a big idea. And then we just focused on that. And then we hung on in there. We went through one meltdown. We raised venture capital. Went through one meltdown and we listed in 2006. And since then, it's sort of been, on an upward climb, an upward swing. And so we are where we are now. And that's how it is. I think, so I chose entrepreneurship not as this thing that I will build a big company one day. As I wanted independence, I wanted to create, I wanted this way of life. I didn't want to work in a large corporation, and I chose to be an entrepreneur. I got lucky that we found Naukri, and then life went on. Yes, we've been helped by many things along the way in the last 24 years. Many, I think, environmental factors, whether it's government policy, whether it's the internet becoming ubiquitous, whether it's mobile telephony, whether it's data over mobile. all those things.
No, I think it's been a great journey, Sanjeev, and massive inspiration for many in the country, your journey. And, Gopal, you're also a product of the same era, but you had traditional businesses, then now, you sit on the forefront of new tech-led kind of, investments, and you've got a Nika IPO coming too, which something you supported way back. So a little bit on your journey and some learnings from your life that can be shared with everyone. Gopal?
Thank you, Raja. And again, thank you, ICC. I just found it curious that ICC is nearly 100 years old plus, and we are now talking about India at 100. So it seems to be like the perfect platform for this. So thank you for having us. Sanjeev has, I think, set a very good context, Raja. And I started from a multi-generation family business. Nearly 80 years old when I started, the business was when I entered. And I actually became an entrepreneur on my own right, simply because I didn't like large businesses. When I went to work for the first couple of years, only two things were truths. One is I didn't enjoy going to work, and second is nobody enjoyed having me around. So from that point of view, to say, listen, I need to go build my own business. And I was born in the wombs of an India where shortage was the most obvious thing next to oxygen and water, right? So everything from your telephone line to getting a visa, to getting foreign exchange, to travel, to a license from DGTD in Delhi to make washing machines for a monopoly house. It was just that one word, shortage. Everything was in shortage, right? So fundamentally, it was an India built on long-term optimism and extreme short-term pessimism. So I basically try to answer that calling of making those Indian shortages in some way a little bit easier for people, whether it's with computer peripherals or whether it's with washing machines or whether it was with comfortable seats for buses and tractors and so on and so forth. So my aha moment was with the same guru that Raja, you and I went to, Professor C.K. Prahalad, when he pointed out to me is that, look, you all come from multi-generation businesses. Why don't you focus instead? Liberalization opened up the door to the next gen entrepreneur, people who are professionals who decided to segue into entrepreneurship after 2 years, 5 years, or right out of college like Dipinder. But this generation of entrepreneurs, you can actually give them a hand up. You can actually help them with capital, with connectivity and capability. That inspired me. And I think with CK's inspiration and the support of, I remember now, 600 Indians who wrote us checks from 25 lakhs onwards into an 8-year lock-in PE fund, we actually started our first fund and our mission of essentially empowering the next gen entrepreneur. So that was the whole idea, that the old India, in some sense, should see the new India launched. And that is how TVS Capital was born. And believe me, if I could say the best thing I ever did in my life, I hope it's still maybe in the future. But as of now, when I count and I see people like Dipinder standing there and Sanjeev, I say, this is the best thing I've done so far.
Yeah, no, it's, entrepreneurship, interesting, right? I think that's a common thread that we are carrying through because, it was earlier always that, entrepreneurs were from business families. Even I have had, looked at entrepreneurship primarily because you come from a business family. But the definition of entrepreneurship for India particularly, right, over this entire period has changed so drastically where we see so many, stories of, the educated middle class, the average Indian achieving glories and success that, puts to shame so many business families and what has happened over decades. And, I think Dipi here is an example of one of those, key people, which is inspiring, again, I think so many millions. And, Dipi, interestingly, your journey started when this discussion on an India at 75 started, right? In India at 60, around 2008, which Gopal was referring to. And you were just getting started with Zomato. And yours has been a phenomenal 13, 14-year journey. Maybe if you want to take us a little bit through that and some peek from some of the stories that you might want to share with all of us here today.
Absolutely. I think, first of all, I didn't start out to build what we have built so far, right? So one of the most important things is that I didn't want to work somewhere else. And all I was really hoping for is to make a couple of lakhs per month on my own. And that is the journey. And that is what I started with. Stumbled across something that started working. had a next goal, had one more goal after that, and so it just like kept on piling up. And along this while, all this while, we've been very, very focused on that that we have to build a customer-first business, and we have to be sustainable as a business in the long term, right? And if both of these things get built, maybe we'll build $1 billion company. And so and even
No, but
this
Dipinder, can I ask a question on that? Right? Yes. $1 billion dream पहली बार कब आई?
Instagram की acquisition हुई थी जब, and that 2013, 14, something like that.
5 years in. 5 years in, Rajan, he got $1 billion dream. Before that, he was running a photo business.
Yeah. When Instagram acquisition happened, it was a wow moment for everybody in the world, right? That was $1 billion deal, and that was 8-9 years ago, whatever. And nowadays, billion is almost like you getting a private limited company started. So, but that was what $1 billion valuation was 7-8 years ago, and that was the dream. The whole idea is to just be able to do what you want to do, right? And pretty much that's it. And I think, and beyond that, stay focused on the customer, continue to change, don't have sunk cost fallacy. That's what's been working for us here. I mean, and maybe 2 years down the line, we'll have to change the business model, and we are totally up for it. We don't care, as long as we are serving the customer well. And I think India is going to change at a very fast pace, right? And as it has been changing over the last few years, and we have to be one step ahead of the change if we all want to continue to live and survive and thrive. That's what I think.
Yeah, no, absolutely. You talked of the $1 billion thing, now going forward, you keep adding zeros, right? 100 billion, trillion. Today, if you see out of the $6 trillion companies in the world, 5 are tech companies. And we know how much of Indianness has gone into all of them, whether it's the Indian leadership, the sweat of the Indian engineer. I think the time has come, as we look at India at 100, that these companies actually come out of India. DP, and you're a great example of one such, enterprise. But I think it's really important how a country like India, which has, 1/6 of the world population, really has a lot more companies in the Fortune 100, Fortune 500. We just have 2 today, and I think that to us is the excitement. That to us is the journey of India at 100. And, as we look at, some of this happening, I think I want to come back to you, Sanjeev, because, the talent exists, the goal to make things happen exist. I was in a kind of a convocation with college engineers who were graduating, and I said, how many of you want to become job creators versus job seekers? And like what Deepi said, 60% of the people put up their hand, in that hall. This was just pre-COVID, right? So the aspiration is there, all of the talent is there. How do we make it happen? What's that enabling environment, Sanjeev, that you see we will need to embark upon as a country, if we take India first to make that happen?
Well, look, I don't believe that a company should set itself a goal of being $1 trillion company. I believe a company should set a goal of serving its customers in a profitable manner, investing in technology, innovation, the way Dipinder has done, right? Now, in the process, he has built a company that is today valued at 13 billion. Now, that is a happy incidental outcome. Point is that he is not focused on valuation. When I talk to him, he is focused on serving his customers, beating competition, innovating, doing new stuff all the time, and figuring out, what next, right? And that's what we should focus on. Now, if you're talking about a goal where of the top 100 companies in the world, maybe 30, 40 come from India, right? If you look at actually Rajan and Gopal and Dipinder, if you just look at the leading companies in the world in terms of valuation, right? I would imagine the vast majority of them had large home markets, very often the US, right? Where they grew big in the home markets first. And then they expanded globally, and some of them did not even expand globally, but they're still in the top 100. Right? So if you look at the Chinese companies, they've got great valuations, but they have a large economy at home. Right? So to a large extent, I would imagine we'll be riding the wave of the Indian economy. So the Indian economy grows fast. It'll become a lot easier for India to produce these kind of companies. Right? And if India does not grow fast, then there'll be headwinds. Because you can only, because you first become big in your home market, then you go global. There are countries that have done differently. Japan, for example, done differently, but I'm not sure India can have that kind of export-led growth. Right? We have a large domestic economy. We've got to first become big in India. That's what my view is. I mean, I could be wrong, but I believe this is right.
No, I think you're absolutely right. And I think India having a strong homegrown market in the future are all steps that are going to, lead to
ultimately, Rajan, आप Zomato देखो, ये 14 country में गए, लेकिन बड़े हुए हैं home markets.
Correct. No, absolutely. And I think that is the future, as you create global companies with a strong home market. I think it's great. And now with more risk capital available also, within India, we may not be able to predict, what that outcome will be. But, like Gopal, you like to always talk, what are the pramanas to see Vishwarupam at 100 happen? With your deep insight into, some of the philosophical aspects of change, you want to share some thoughts around what are those pramanas that will trigger this change?
Raja, I think very much being an entrepreneur, in some sense, Vedanta was written for entrepreneurs. It's written for everybody, but for entrepreneurs in some sense, what I think Dipinder said, you just focus on doing what you are capable of to the best that you can, right? Becomes the single most important thing. And I think that is exactly what people like Dipinder have done. I still remember, Dipinder, we were calculating what is the maximum potential for deliveries in India many years ago in the fund. And somebody came with a number of 2 to 3 lakh deliveries per day. Now, you will probably say, did you mean per hour, right? I mean, I'm just saying. So in some sense, the size of the Vishwarupam, Raja, is now something that in the past, with great hesitation, we would say, India has a bright future. Today, we are willing to stand up and say, of course, India has a bright future. That's not what this conversation is about. This conversation is about what we can do to participate in that future. So from long-term optimism and short-term pessimism, India has now moved for the first time to long-term confidence and short-term optimism. I think it's a big shift that has taken place in this country. If you ask me, the main thing that I see are twofold, which in terms of pramanas from a public policy point of view. And the first is we talk about Atmanirbharta. Kahin pe Atmanirbharta ki baat hi hoti rehti hai. So isme my feeling is Atmanirbharta is also applicable to capital. It is not that Atmanirbharta is only to manufacturing or to IT company or a digital entrepreneur. So we need to make sure the capital builds a virtual cycle in India. The more of the gains from companies like Dipinder's company in the market cap, gain in the public markets, in the exits in VCP stay in India. And I'm not saying all of it should. I'm just saying more of it stays. Today it's maybe 7 or 8%. But that builds up more and more capital available for a democratized growth of other startups. We cannot be infinitely dependent on foreign capital, right? And sitting in Calcutta, the first thing that strikes you here is you're in some kind of colonial town, which was basically the first port at which
actually, Gopal, sorry, may I interject, Gopal? Dipinder's cap table prior to IPO had substantial Indian shareholding because Info Edge is Indian. Dipinder is Indian. I mean, I think there was 30-40%. Dipinder, what was your Indian shareholding before the IPO?
So that's where I was going, if I might, Sanjeev. So fundamentally, I think that is the main story. Today, 85% to 90% of the capital is coming. And what are the global trends, global whims, global fancies are deciding what happens in India? After all, entrepreneurs need fuel. So I think that's one area where a lot of work needs to be done. And I think thanks to people like Sanjeev, so maybe a Zomato or a Policy Bazaar is an exception. But for that, I can give 10 examples that are not, with maybe even higher market caps, right? So fundamentally, that I think is the main thing. I think a lot of good progress is happening in that direction. But we need to make sure that area is paid attention to with flow of VCP money, with make sure tax rates are uniform. I mean, isn't it interesting that you can invest in the public market at lower tax rates than in startups? It doesn't really make much sense. So I think that's one area of work, whether it's basically encouraging companies to list abroad. And Dipinder and Sanjeev are exemplars. Nykaa is an exemplar. Naukri itself in those days was an exemplar of digital companies which constitute 3% of India's market cap to get to about 25-30% of the market cap, right? So I think the Indian capital story is one big story. The rest of it, is, I think the government is doing something which we are every day aware of, which is driving startups and driving digitalization. And that is the adoption of digital by this government is unimaginable. Today, most private sector companies, and I'm using the old word for sake of impression, are way behind the government in terms of digitalization. Whether the public digital infrastructure like UPI, Aadhaar, CoWIN, and on and on and on, I think that is really creating a phenomenally accelerated adoption of digital. So to me, these are the two things. The rest, I would say, we don't worry about how India is going to win T20 in the next 10, 20 years. Right? We know we're going to win, for sure. And the same way, Indians will take care of the rest. Just leave it to them. There are enough Indians and so many 25 million a year which are entering life, and maybe 10, 15 million are entering into educated, skilled workforces. They will take care of it. They will take us to that place. Their ambitions, their desires will take us there. I would only focus on making sure enough capital is available for this talent in an unlimited way. That's what I would focus on. Leave the rest to India.
No, absolutely, Gopal. I think, and Deepi, you can talk about a little bit about your cap table and really your experience with domestic capital, across these years, right? Over this journey of 14 years, when you've tapped into different types of capital, maybe your thoughts around that.
It took us about $1 billion to build the business that we built, right? And over the last 10 years, it was almost impossible to find local capital.
Absolutely.
Domestic capital for that. And maybe $900 million out of the $1 billion that we raised came from outside of India. And but InfoEdge was early enough, so therefore InfoEdge was a large chunk of our cap table. So even today, 66% of our cap table is actually foreign. Okay. Now this also stops us from creating that virtuous cycle where we can also invest in Indian startups, because even we have been branded as foreign. That's where the one size fits all of FDI doesn't work. Indian founder, Indian company, Indian board, all businesses Indian. We got nobody foreign has any kind of control here. But our capital is not really being accepted by companies as domestic capital. That's where we're stuck, right? So this also needs to be solved at some point, because companies which come out of the last 10 years will not be domestic shareholding at all, because we didn't have capital earlier. Now, somewhere we need to be termed as domestic capital because we are Indian, 100% Indian. So we should be able to invest further. And I think over the last 10 years, what also happened was that whenever we try to work with large companies, they always had the mindset to own us. There was no partnership mindset at all, right? There was no financial investment mindset, etc. And somewhere we also want to change that going forward. We want to invest in startups which are at the edge of the business that we do, and not want to own them, right? We want to work with them, we want to partner with them, we want to grow them so that they benefit us, we benefit them. And I think we want to sort of lead the way and show everybody that that can also happen. You don't really need to own the startups that you work with or partner with in order to create value for yourself. I think these are the two mindsets, one from a regulatory point of view and another from a partnership and not owning point of view, that we need to change if we need to create hundreds and thousands of startups which flourish over the next 20 years there.
No, Raja, if I can just jump in for a second, if you see every founder, I think Dipinder has put it so well, even Nykaa, as soon as the founders are getting capital, they will start getting back into investing. And you see that we have a beautiful chart at the Indian Venture Capital Association of how founders have invested in other startups. And that is it. I'm so glad Dipinder brought it up. So domestic capital has got so many angles to it.
No, and we've already raised this, suggestion, to the finance ministry to say, when you buy a residential plot or a plot of land or real estate, you get capital gains that you can offset against your next investment. When you realize or unlock value in a startup, can the startup founders be given the opportunity to reinvest that in, in other startups rather than, paying it as completely as tax, because anyway, the tax numbers will also be pretty significant especially for the successful ones. And there seems to be some merit and some thought process that maybe we should all champion, as this new age of thinking or this new ways of thinking, come about. And I think this is the build-up, Dipinder, as we were talking towards the India at 100. How do you deal with talent though, DP? I think there is a huge stress today, around talent. And I know, Sanjeev, you provide talent, right, as Naukri, and you've been that journey, you've used talent. The people of India, the youth, the young people are going to be, there at the forefront, in 20, 25 years. How do we look at that piece? I mean, any thoughts, DP?
My thoughts are that we have to build talent. There is no talent for everybody out there. We don't have enough talent out there. So we have to literally get people out of college, the young, brilliant people, and train them. That's what we've been doing over the last 10, 12 years. Delhi, we didn't have tech people at all, right? So we literally built everything from grounds up. We trained everybody ourselves. If we don't have talent, we have to build it. And with the amount of capital coming in, the salaries are going up. Affordability nahi hai anymore, right? So we have to build talent. Otherwise, we're all going to get choked out of it. So there's no other way, according to me.
Sanjeev, your thoughts on this subject?
What we've been seeing, what we had thought in the first lockdown when COVID began, we said people lose jobs en masse, companies will retrench. Yes, some people did lose jobs.
Yes.
But the bounce back, especially in tech hiring, and not just tech companies, this is non-tech companies doing tech hiring, has been so tremendous that salaries have been bit through the roof, which is ultimately companies will have to do what Dipinder is saying. Hire fresh from college, hire 10, train them well, maybe 5 will stay. And there'll be attrition. And you keep on doing that. You've got to build that kind of funnel, that kind of pipeline, right? And at some point in time, hopefully, supply will somehow come up with demand. But right now, demand is outstripping supply by a big factor. Non-tech talent is still a little easier, but even that is now getting tighter. Of course, there are some sectors that are lagging, such as hospitality and travel, because for obvious reasons that the demand is not there right now, and there's excess capacity, and people have been put on furlough and they've been laid off, so they will get those guys back first. And there isn't a shortage of talent there right now. But as the economy bounces back, supposing it is true that COVID is over, there's no debilitating third wave. If that is the case, I think in 6 months' time, even in the sectors that are soft right now, you will see a talent shortage. So the bounce back has been fairly sharp.
No, and today the word digital, you put it ahead of any word or any sector and it makes complete sense, right? Digital agriculture, digital healthcare, you name it. And there are so many, opportunities and challenges there. And I think that's one big thing that has changed, right? So we talked of capital, we've talked of, talent, and now really about, building that future, and Sanjeev, you built an operational business, then you created investments, complex structure, how did that come about? And any thoughts on how should that create value going forward? How do you play that game?
So I'll tell you, see, we went public in 2006. It was a small IPO compared to today's standards, very small, minuscule. But we had a couple of 100 crores sloshing around in the bank, and the company was profitable. So, every quarter cash was being added. And, we had given 4 or 5 reasons to SEBI in the RHP for the IPO, and one of them was inorganic growth. Okay, and we said, hey, let's acquire something. And we went out and we found everything's too expensive. There's almost nothing acquired. Whatever was there is too expensive. So then we said, why not invest in a few startups and see what's happening? Because we are seeing there's not enough capital, because in 2007, there wasn't enough capital. And there are enough guys coming up. It's not like today, but even then there were enough people trying. Enough to give us confidence and look, we can back a few and let's see what happens. Right. And so it began as a small cottage sector activity that I was doing with 1.5 people, right, in 2007. Then 2010, I stepped aside as CEO and said, I will do this full time. Right, for the company. I'm just doing it for the company, right? And we had already invested in Policy Bazaar in 2008, and we met Dipinder and we invested in Foodie Bay, which became Zomato later, in 2010. Right? And there were a bunch of other companies did in the first 4 or 5 years, which did not do so well. But these two did really well, right? And then gradually, as investing became a serious activity for us, we put a team together. We, carved out and made a VC fund. So as we tasted success, we got bolder. So we did it like a startup. Start small, get some results. As results come, invest more, make it bigger, make it bigger. That's how it's taken us 14 years since we made our first investment. But now we are where we are because we have tasted success.
Yeah, and ICC, a lot of ICC members come from traditional businesses, and I think the family office concept, businesses looking at startups as an investment has probably started to take a lot of steam in recent times, especially as you see the excitement around the future. And I think there is therefore a change in mindset that's required. Dipi, as you mentioned also, you don't need to own the company. You need to invest. You need to, build the entrepreneurship story. How will your future, investing be different from what Sanjeev was talking, or will it be similar?
We are only trying to look at companies which are at the edge of our business, right? So, which are close to our business, but not really ours. So ecosystem is what we're trying to invest in. And we don't want to own it. We want those founders to get the upside. We want those founders to have all the skin in the game, because if founders don't have skin in the game, things are not going to work. Because companies nowadays need to find product market fit in a 5-year cycle. Every 5-year cycle, you need to find a new product market fit. Yeah. So, and if your people are not going to have skin in the game, things are not going to work beyond 5. So we want founders to have skin in the game, and we just want to help them, back them, not give them the monthly pressure which a lot of VCs do. Give them time to build what they have to build, doing things the right way. That's what we want to do.
Yeah, Gopal is smiling as you.
I'm glad he said monthly, because some people maybe be weekly. So I just wanted to he was being nice.
No,
Raja,
Gopal, you go ahead.
I just wanted to make one comment. Listening to just the conversations, right? You see how every part of India helps the other part of India. You see the fact that the IT services, quote unquote, right, with 17% or so of the market right now, has created 130, 140 billion export business. And that talent has fed into the digital industry, right? Then you have startups like Dipinder's startup coming up, right? Or first Sanjeev, then Dipinder. They in turn are fueling startups. So I get back to this whole idea of the ecosystem and every piece of the country helping each other. That I think is something very, very important. And Raja, one group of people large India needs to help is the people who quote unquote don't speak English, right? You get so much of talent now who are so capable, but they just don't come with the kind of presence, right? And when you see the Indian cricket teams, you realize how these stars are coming from nowhere and just shining, right? We need to let that happen. And Mr. Kamath, I was speaking to a common friend of the other day, and he was talking about the old days in ICICI, where he said one of the qualifications he gave his head of HR for talent, he said, should not speak English. I don't want people who speak English. I want the best talent who doesn't speak. And it obviously doesn't mean literally, but what he means is, their natural language is a local language. So I think we need to go deeper and deeper and democratize access to talent, even in large companies, in the non-startup India.
No, and he also added one other point. He said, as you get that talent, you can add one extra zero to your revenue number. He's always a guy adding zeros, because you go to tier 2, you go to tier 3, you capture aspirations of, and very underserved market even today in India, right? When we look at India and Bharat story and we talk of Atmanirbhar, the ability to create and unlock that value, according to me, is really the true journey from where we are today, to 2047. I know there are a lot of, questions coming into the Q&A panel, and I am going to, hand it back to Vikash, who will, conduct the Q&A session. But I just want to say that, the entrepreneur word, really to me is standing out, as we build future businesses. And the one thing that I think has stayed consistent, it's always a person who comes with very limited resources, but very high aspirations, willing to innovate, willing to take risks, willing to put everything that they have. But again, as we talk of India, innovate within a sandbox that I think can create larger good. And I think for a country like India, that happens naturally, because anything that you do at scale, you do it with social equity, you do it with affordability, because these, I think, are the ingredients, of creating successful businesses in India that I'm very confident will ultimately, capture the world and put us there. So thank you, Sanjeev, Gopal, Deepi, for sharing all these thoughts. It's been a wonderful interaction, but there are a lot of Q&A questions waiting for you, and I'm going to hand it back to Vikash to take us through the last 15-20 minutes of the session. Back to you, Vikash. Thank you.
Thank you, Mr. Navani.
Thank you.
Thank you, Mr. Bikhchandani, Mr. Srinivasan, Mr. Goyal, and Mr. Navani. It's been a wonderful fireside chat, and it was extremely insightful. And I'm sure all of us agree with the views shared during the course of this conversation. I completely agree that changing aspirations, technology, and globalization are driving deep disruptions all around us. Therefore, all of us have to respond to these forces thoughtfully and constantly. In fact, I wish to take the liberty of asking a question to everyone on the panel. Based on your experiences of business transformation and mentoring new age businesses, what learnings would you like to share with entrepreneurs who are largely part of the old economy, traditional businesses, but running successful businesses on keeping their business relevant in the coming decades, especially keeping in mind the new opportunities that are opening up?
Who is that question addressed to?
All people, Sanjeev.
Gopal, where you want to go?
No, go ahead, Sanjeev.
No, look, I'll just say one thing. Change is constant. We've seen that, right? When the new technology is adopted, it disrupts, it changes. We have seen Dipinder do that. We've seen Naukri do that, right? In the past, we've seen other companies, we've seen Policybazaar do that, right? So the question is, are you alive to the changes? Are you going to embrace the changes, especially in your sector? And what are you doing to perhaps digitize your business? The way you interact with customers, the way you interact with suppliers, the way you run your operations, the way you generate demand, the way you put all the ecosystem players in your space together, right? And if you're not doing it and you're not capable of doing it, are you investing behind people who are doing it? So if something will disrupt your sector, maybe you should own 20-30% of it, right? So that you at least learn, so that if something disrupts your sector, you own a significant chunk of it. So you're on top of the game.
Okay.
And yes, understand that 7 or 8 out of 10 will fail. So you will lose money. And also understand that early stage investing, the lemons ripen early. The blowouts come within 2-3 years. The successes take 10-15 years. The way Zomato has taken 13-14 years.
13.
Absolutely.
Vikash, you specifically asked a question about traditional business in the next generation.
Yeah.
And it reminds me of the old song from the 70s saying, "Teach your children well, and their father's hell will slowly go by." You might remember that song, I'm sure. I think what we need to teach our children is that they should not have to get trapped in old businesses, in their old business, right? Give them the freedom to fly, give them some capital if necessary, but don't expect them to make your business better. And you will be surprised as to what they can do. I think the biggest thing that old businesses should do is exactly what that song advocates. Teach them to do what they're good at. When Lord Krishna said, "Yoga karmasu kaushalam," you can interpret in whichever way you want. But one way you can interpret it is that if you follow the highest cause on your talent, your natural vasanas, then only you will get kaushalam, you will get success, right? So I think give them that freedom to follow their vasanas. They should do what is their swadharma. They should not do paradharma. And normally, as parents, we're very good in exciting them to do paradharma only. So I would say give them that freedom.
Really, thank you.
I agree with Gopal. And a couple of days ago, I was asked a question: what would I tell some of the young startup founders? And I said, I don't have anything to say to them. Those guys are so good. They are actually brilliant. I should be the one learning from them, rather me saying I have done so much, I have a lot of ego, and therefore I should be the one teaching those guys.
Right.
So I think we should let people do what they do best and not give them the biases of the past, because the biases of the past are not going to build the future no chance.
True, very true.
Yeah, and just Vikas, one point, since this is a relevant question, and I know the thoughts and the minds of the people who are listening to this, because
Rajan, you
you
also
have
come from
successful
textile background, so I would love to hear from you as well.
Yeah, no, so you have traditional business, and we also, right? We have very successful manufacturing businesses in Thailand. We are partners with the Aditya Birla Group, created large companies in Southeast Asia, on the manufacturing side. And when we were looking at that same opportunity here, and I came in, into the family business, and I tried really hard to innovate, bring in new age practices within traditional businesses, operate at the edges of those businesses, do all of that. Till one day I said, no matter, I'll spend a whole lifetime trying. So I just cut off everything. I don't have a single employee. Even, somewhere in the family, they'll say, one finance guy though should be common, from there. Not one person created a completely different methodology of allocating capital. No land, building machinery, and then put a sales force to continue to sell the same product, to people, but have the ability to innovate, shape, invested in complete intangibles, digital rights to celebrities, crores of rupees, which we don't know will expire in 2 years without you using it. Did crazy things, right? But, really said, if we want to build up for the next 30 years, operational businesses in new age, the dynamism and the culture has to be distinctly different. And I think that's the, at least it worked for us, but, different things will work for different, groups and companies. This is just one example of a story that I wanted to share, but I know this is right up on the minds of many people, and there are so many good success stories. And I think at the end of the day, what Deepi said was perfect, just trust the other guys who are smarter and invest behind them. Maybe that's the way.
Thank you so much. It was a really wonderful insight. I have a follow-up question. Like, we are all talking about a $5 trillion economy and a $10 trillion economy. So what are the sectors which will drive the economy? Like, as a business, what sectors a businessman or entrepreneur should look into? Where the opportunity lies? So if you can have some insights from any one of you.
I think, Vikash, I was just doing some quick numbers on the back of the paper, right? IMF has recently published yesterday or the day before the new forecasts. So if I assume that India at 100, I was just calculating, probably come in less than 25 years, right? Time is going to fly so fast, might even come in 20 years by 2040, right? So fundamentally, the number of the GDP is going to be between 10 and 15 trillion, whichever, depending which number you use. At that scale, I don't think it really matters what you do, because anything that is going to be consumed by the demographic, the large number of people growth, is going to be a great business. So I would kind of at the cost of being sounding like a stuck record, this idea of Swadharma, which Gita puts so well. What is your natural inner strength? Follow that and follow that in business. Anything outside that is Paradharma. What is in you is Swadharma. Those vasanas were given to you for a reason, and follow that in a very systematic, hardworking way, and the results will automatically present themselves.
Absolutely, thank you. And before I open up the forum for questions from our members, I'll pick up a question from the chat, which says, I would like to ask that in early stage startup, what is the best funding option to opt, and what is the right way to get the right investor to put the money? So,
Yeah,
please. Yeah, please.
See, I have got a couple of things. Number one is that the best time to raise money is when the investor comes to you rather than you going to the investor. Right? In the case of Zomato, Pune-based Dipinder, I reached out. He was simply running his business, and he had got his business to a place where it attracted my attention. Just as it attracted the attention of one or two other investors who were talking to him as well. So, so basically focus on your customer, focus on your company, get your company to a place where investors come to you rather than you go to investors. Right?
Absolutely.
So a little adaptation of what Gopal said. You do your work, do what you're good at. The universe will open up.
Right.
Opportunity will come to you.
One quick thing to add, and over the last 11 years, we've raised $1 billion-ish, and post-IPO even more, 3 billion in total. We've almost never been able to raise whenever we wanted to raise. Okay, so, I mean, that never happens. The market is lopsided that way. Just like loans are given to people who don't need the money, funding also comes to people who don't go ask for it.
Absolutely. We all agree to this, absolutely. Sanjay, you want to go next? You raised your hand.
Yeah. Good evening to all the panelists. Just a simple question to Mr. Goyal. When does becoming profitable and getting into the black, is it part of your medium-term plan, vision, or goal?
I can't talk about it since we are a public company right now.
Okay.
No, but I think, what Dipinder said in the past is that for Zomato, profitable or not profitable is a matter of strategy, not compulsion. They can be profitable should they choose to be, but they're investing in growth, and so jab hona hoga ho jayenge.
Because we are facing, Sanjay ji, a very interesting phenomena, right? The public market valuations are following the private market, right? And the private market and the public market for the first time are converging. There's actually a Sangam taking place now. So the question really is, once the Sangam takes place, now you have Policy Bazaar coming, you have Paytm coming, you have Nykaa coming and so forth. Will they start over quarters of analyst hammering, start suddenly talking about EBITDA and suddenly become more EBITDA? Or will more public companies say, you know what, I can also pursue aggressive growth and postpone my EBITDA? And maybe it's a bit of both. When the Sangam takes place, when the Milap takes place, both will change.
Yeah,
So
I think we are on for a very interesting mindset change.
Prashant, you want to go next?
Yeah. Actually, just wanted to ask Gopal ji, Sanjeev ji, and Dipinder, what in your views would be the next big reforms which you would expect over the next few years, which has the capacity to fuel growth in all the sectors across all sectors in India?
I guess I'll just take it from the same angle at which I've been used to, and that is make sure that more pools of domestic capital flow into the hands of investors. There's a ton of money in PFRDA and the private and the public and private pension funds, which if in a well-regulated, diversified manner are put into venture capital and private equity funds and other kind of funds, you will find that domestic managers, and by domestic man, I mean people like Sanjeev or myself or anybody, will actually find a very different way of spotting and working with talent and bringing that money to talent. And as that money multiplies, it will go back into the system and it will become a virtuous cycle. So I think the government is on the cusp of doing that. A smaller reform probably is related to signaling to the world that investing in public markets should not be given a preferential treatment over investing in startups, that you pay the 27% tax when you invest in a startup, long-term capital gains, some indexation, and you pay 10 or 11% in public markets for long-term. I think that's a smaller stroke of the pen kind of reform. But the larger reform could be finding ways to get the large pools of 15, 20 lakh of public crores of pension money, maybe 1 or 2 lakh crores of that into the hands of domestic managers. The government has shown proof of concept with the SIDBI fund. The SIDBI fund of funds is a revolutionary move of the government. Nearly 50 small funds have got money, including mine, and from SIDBI, the fund of funds for startups. And they in turn have drawn capital from HNIs like you and from other institutions and have created a flood of capital into the early stage, A, B stage of funding. So I would say capital pools in a very safe manner to funds.
Thank you. Varun, you want to go next? Varun? I think it's not there. Maybe now Mr. Anubhav Chandak from Avendus. You want to go next?
Sure. So Gopal, I think this is more particular for you and Sanjeev, is when you look at old businesses, old economic businesses, right? Earlier it was the last page, now it's the front page talking about 1 billion being raised and 500 million, being raised and 100 million being raised. And people say that, look, I've built a business for 20 years, but not able to reach these valuations. Whereas you have, someone young as DP coming in and doing it in 10 years. Am I doing something wrong? So what's your advice to these entrepreneurs, and many of them on the call here, saying that what are those two or three things they should do over the next 4 or 5 years, which can help them achieve their aspirations?
Sanjeev?
Yeah, listen, I think focus on nuts and bolts of your business. Just focus on your customer, focus on solving unsolved problems, focus on, innovating, focus on executing, focus on doing stuff that makes your business work better. Valuation is a consequence here.
I think, Anubhav, basically what you're seeing, I think Sanjeev mentioned this last night in our call, that fundamentally the pricing, I don't even want to call these current companies valuation, it's pricing, right? Because at this particular stage, it's just pricing because the glut of the central bank money. Now, there's 35, whatever, some huge $1 trillion is the total size of central bank balance sheets today, 35% of world GDP. They've added maybe 6 trillion or so if you take just since COVID, last 6 to 7 quarters. So I think exactly what Sanjeev says, right? You just do what you're supposed to do it to the best of your ability, create value. Let price valuation come as a consequence. You don't target valuation. You just build value. There's nothing else we should do.
Just something to add to what you guys are saying. For the longest period of time, for the first 5-7 years of our life, we were actually focused on what do we as a startup want from the world.
Okay.
But that wasn't working beyond a point, right? Only when we switched our mindset to what does the world want from us, that's when things started working. So that is being like customer first, execution focused, and so on and so on. So we have to be looking out and then in, rather than looking in and then out. I think that's the most important thing building a startup.
On lighter note, Vikash, basically Ikigai meets Bhagavad Gita. So
absolutely, we have to go back to Gita's again. Mr. Kalyankar, you want to go next?
Yeah.
This is the last. Yeah.
So I have a question for any of the panelists. So do you think more HNIs and business houses in India should come forward and support startups with disruptive ideas? In US, we find many such backers, but I don't think we see so much of that in India.
I think they should, but you got to make sure that you do it in a smart manner, do it systematically, methodically. It's your hard-earned money. Don't blow it away. Diversify your risk. Study the startups, study the sector, go with other, invest alongside other good people. Okay, and yeah, but I would say yes. Startups are a very good asset class if done right, and you got to be patient. Startups got to be very patient.
Very well put.
And you got to make sure you got to be damn sure someone will blow up, and don't be demoralized.
Very well put, Sanjeev. I think just want to say one thing, that today the Indian venture capital private equity industry of the Indian funds exists because of Indian HNIs, right? They are the ones who basically said, look, I made money from my business. I want to make sure I support the next gen entrepreneurs by supporting either direct investments through angel networks or angel funds or through VCP funds. So HNIs have played actually a very huge role. And as far as investing, I think Sanjeev has said it all.
Thank you.
Dr. D. Nandi, you have raised your hand. You want to go next?
Yeah, good evening.
Good evening.
So actually my question to one of the panelists, that what are your views about the prospect of the crowdfunding in India? And we think we should bring in blockchain technology to build a crowdfunding platform. So if you can highlight on crowdfunding.
No, I think the cost of failure, right, at an early stage, when it becomes in public space that this has become a, quote, to use a favorite word, a scam, is something which is very scary. And I think the point that Sanjeev said about you can get demoralized is very, is even more when a regulator finds that in a crowdfunding, a lot of people, let's say, didn't do well and start filing complaints, then SEBI wants to scrutinize the space. So I would say we should make haste a bit slowly. The government has got the SEBI has got a great scheme with angel funds, which they, I think, put together. Yeah, it's not perfect, but it works. There are great angel networks. Sanjeev is part of the Indian Angel Network. I am part of the Chennai Angels. There are many angel networks. So my My feeling is the crowdfunding at first comes through those kind of sources initially and let the volume build up. Today, still India is only at about, if you look at the relevant sector, we're only doing about 10, 15,000 crores of annual funding. If you leave out the large tickets and so on, just go to Series A, pre-Series A. So I think we should go slowly. I would be a little bit conservative in this, my suggestion.
So there's a question on the chat group which asks, how did you all get comfortable with failures? It's a difficult one. So,
can I answer this question?
Yes, please.
Take a like very, very deep breath and wake up the next day fresh. That's it, yeah. There's nothing else.
Our strategy was बहुत खर्चे कम करोगे तो जितना revenue आएगा ना, you will not fail.
Absolutely.
I don't know water. So be frugal. That was my strategy.
So we have a last question from Varun Thappar. Varun, you want to go now?
Yeah, thank you, Vikash. So my question is to all the panelists. So some of us entrepreneurs are running family offices in addition to our traditional businesses. But the concept of family office itself is quite new in the Indian context and it's evolving. So my question would be that what advice would you have for us who are running our family offices on how to evolve and better this function?
Gopal, you want to take that?
Anubhav is the best guy, Varun, to advise you on this in terms of being a very professional family office. I think you're one of the smartest family office people that I've had the pleasure to work with. So I think you guys are all doing the right thing. You'll all find your way, and all of the family office India are really doing some fantastic work.
Actually, we recently came up, Varun, with a pretty interesting report that covered about 30 or 40 different family offices and what they are doing and why did they do what they do, how did they engage with some of the other funds. I'll have that shared, with you. Maybe that could add some value to many others in the group as well. This is done by a large network of people from globally as well as from India.
And any specific advice that you would have for us in terms of, looking at the private capital market and deeper engagement with the private capital market?
So let me ask you, Varun, just to clarify. So up until now, has your family office been investing in VC funds or in unlisted companies?
Yes, we have, including Mr. Srinivasan's fund.
So look, you're doing all right. I mean, if you invested in Gopal's fund, I mean, you can't get better than that. But look, obviously you need a method to sort of evaluate funds, to get intelligence on them, to figure out what the fund manager thinks, to figure out what the past performance is, to understand what the strategy is. You agree with that strategy. So the deeper you go into that, the more you learn. It's about getting rolling up your sleeves and sort of engaging it.
Thank you.
And Varun, one thing which you can do, I think Raja was referring to, I just want to just close it out on that. There are all of these little groups, informal virtual groups on family offices. And I'm not sure that you're part of it. And between me and Raja, I'll make sure you add you to one of those groups. There's a tremendous amount of daily flow of chatter in terms of different family offices commenting on different things. This is purely focused on venture capital and angel investing. So that could also be one idea. The other idea I would say is, since you know all of us well, give us 2-3 hours of your time sometime, and we just walk you through typically the way we work, how we work, our deal evaluation, rather than just a pitch presentation, really how it is inside the kitchen. What we serve you is the food, but come and visit the kitchen from time to time. I mean, with Dipinder there, I have to talk about kitchen. So, and I think, the food delivery spoils us all because we don't see the kitchen. You need to visit the kitchen.
So I have a small question here. As a family office, how do we identify stories, unlisted stories like Zomato's or Policy Bazaars of the world? How do we make less mistakes? And of course, mistakes will be there. So what is your suggestion to the family offices to invest into?
देखिए, if you had come into Zomato in 2010, आपको 11 साल रुकना पड़ता.
Absolutely.
Before deliverance. And उसके बाद भी, it was a 50-60% pop, which means you're locked in if you don't sell in the IPO. So first thing is, if you want to get the kind of crazy returns that a very early stage company can give you, if it succeeds, right? Then you have to wait 10, 12, 15 saal. So do you have that patience? You know, you have to go it solo. We went for the first 4 rounds. We were solo in Zomato, right? You know, so you know, those are things you got to sort of figure out about yourself. Then listen, I have a 5-year time horizon. Then you got to say, okay, I'll sell in Series B to somebody, or I'll go in late, you know, and then stay till the IPO or stay till the strategic sale. But अगर आपको पूरी life cycle play करनी है, then 10, 12, 14 साल लग सकते हैं. It's getting shorter, I believe, now in India, but at least in 2010, you know, we invested in it's been 13 years since we went into Policybazaar. 13 years, we're still there. 11 years since we went into Zomato, we're still there. So startup investing requires 2, 3 things. Number one, if you're going very early, be patient. Number 2 is diversify your risk by having a portfolio, or simply go in with VC funds like Gopal's, where they'll do that work for you.
Or the simplest way is to follow you now.
Well, so the challenge is that if it's a really good startup, they'll probably be getting chased by 5 or 6 venture capital funds.
Yeah.
And then getting in becomes a problem if you're a family office.
Because in the Series A level, right, what happens? The selection bias is really against the individual investor. For the good Series A companies, right, to Series A to Series B last year, 5x was the uptick. If you just take about 31 companies that got funded last quarter, and about 17 of them, there is public data. It is about 4.87x actually, round to round uptick from what I just picked up for the September quarter. The selection bias in that group, which is because you see this data and say, oh wow, 5x, this actually means what Sanjeev said, that the funds that are going after those companies are absolutely fighting their way into those companies, doing their diligence, have patterns of experience. The chance you'll get it is probably that you'll get into those funds, most likely those companies didn't get funded. So I would say either you are an expert in an area which everybody knows you and comes to you, and therefore that's no problem, or you work through your own angel network groups where there's at least a group of you to exchange ideas and protect, like IAN has done brilliantly, or go through a fund. I would say those are the 3 choices.
So Zomato, correct me if I'm wrong, Dipinder, but Zomato did not ever in its history raise money from a family office. Is that right?
No, we did.
Because there was always institutional investors chasing them and giving them money.
No, and we didn't. I mean, we had a couple of conversations with people, but the terms were not as good as VCs would give us back then, and even the VC terms were not as good as what people get right now. So I think there's a lot of mindset shift that needs to come in.
On that note, thank you everybody. In interest of time, I am sure most of our speakers have other engagements also. So our session today have been without doubt one of the most insightful and enlightening sessions. And I wish to convey my heartfelt thanks to Mr. Sanjeev, Mr. Srinivasan, Mr. Goyal, and Mr. Rajan Davnani. And thank you to all our esteemed guests who are being part of this fireside chat. As an optimistic, I'm confident about witnessing growth, and I'm sure we'll become a $5 trillion economy by 2025 and a $10 trillion economy by 2030, irrespective of the challenges that may come our way. We need support from our government, and our role is to give our best to the future prospects of India's economy. And today, I understand better what John Henry Newman, famous English scholar and poet, had meant when he said, "Growth is the only evidence of life." With this, thank you once again to all the speakers. And now may I request Dr. Rajiv Singh, DG, Indian Chamber of Commerce, to kindly deliver the final vote of thanks.
Thank you. I think it is probably one of the finest session, and I don't have enough words to thank. And I will begin with our moderator, Mr. Navani, who did excellent job in terms of asking the right kind of questions and making the whole interaction so useful and insightful. Mr. Raja Navani, thank you. Mr. Bikhchandani, although you cautioned us that we should call you by first name, but let me follow the protocols and still in a way address you as. So we are really thankful to you for bringing in your very, very valuable insights. And I'm sure the people through the discussion what we have with the active involvement and not only the business insights, but drawing from what Mr. Srinivasan added, insights from Vedant, and that really made the whole thing very, very interesting. And so last but not least, we are extremely thankful to Mr. Dipinder Goyal, who is, I would say, the poster boy in this space. And we are truly thankful to you for sparing your time. And I'm sure people who were part of this meeting have truly enjoyed. And on behalf of ICC, our membership, I would like to thank you all once again. Thank you.
Thank you, everyone.
Thank you so much.
Thank you.
Thank you.
Thank you.
Thank you so
Thank you.
And
Thank you,
Raja,
everybody.
thanks
Thank
a lot
you.
for doing it.